Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. Founded it 21 years ago in 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms, which is my passion. Our 21 SPY and ES mean reversion systems have been nailing it, about 90% winning trades. They did well on that last market correction. We also have our amazing KISS systems. And last week we launched our high performance beta, and I'm going to be talking about that shortly. But again, awesome resource. If you're just on YouTube, consider subscribing, hit the enroll button. Our best subscription is the 6-month subscription. They're all the same. That gives you about a 50% break in time by paying up front. Okay, again, hope everyone had a wonderful weekend. It is Sunday early afternoon, August 18th, and this is the very comprehensive technical analysis weekend review of the markets and our trading systems. Okay, if you happen to be new to Breakpoint Trades, these weekend newsletters take anywhere from 40 to 50 minutes, so quite comprehensive. This is our backend recorder for our standard subscription service for our subscribers. I'm going to get this recording started separately. This works on is an audio player for the browser. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone had a wonderful weekend. It is early Sunday afternoon, August 18th, and this is the comprehensive weekend newsletter market review. Got a lot of charts to discuss this weekend. As you know, administrative note, Steve Nelson is now in Europe with his wife on vacation. He's not going to be back until September 3rd, so you guys are going to have me the whole time. I'm actually going to be worn out by the time Steve gets back. Doing every single newsletter is tough. These newsletters take a lot out of us. Steve will tell you that. And so I'm going to be doing all of them. I also may do some small newsletters, guys, instead of a big detailed newsletter every single day. Otherwise, I'm going to go nuts. And I think most of you understand that. Anyway, weekend newsletter here divided into 6 major sections. It's probably going to take us 50 minutes or so to cover everything. Again, first off, we're going to make comments about the market, and then we're going to go into some admin comments like our amazing systems, our KISS systems, our volatility systems. We launched the high performance beta KISS systems the previous week, and I want to discuss those. We'll then move on to the general market analysis, look at all the indexes in a top-down approach from monthly, weekly charts, all the way down to 60 and 30-minute charts. We'll look at a few key indicators such as the VIX, which marked that bottom on August 5th when it spiked up to 66. All right, we'll look at a couple other things as well. The VIX has pulled back to a support zone area, so it is an area to watch for a potential bounce soon. As the market's had a pretty good rally here, kind of a V rally from the lows, but it's into a supply zone, so it's a logical area to soon expect a pullback in the market. But I am looking for a higher low on the next pullback, guys. We'll also look at a few major sectors. I'm not going to look at all of them, just some of the important ones. We'll look at the currencies, US dollar, Japanese yen. Dollar continues to look weak. Yen looks strong, which I called months ago. And we'll look at the precious metals area. Gold broke out to a new all-time high on Friday. GDX, the stocks, continue to move. That area is in a bull market, as you know. We will follow up with some trade ideas as well. All right. Again, as I stated, before I go back to that, some news items this week. Really not a lot of news items, guys. The big ones are the FOMC minutes on Wednesday. Thursday, I have initial jobless claims, S&P 500 global PMI. And remember, we still have geopolitical risk from that Iran-Israeli conflict where, Israel is still vowing to eventually attack Israel, so that could spook the markets if that happens any day, and it's a wild card. All right. Again, really nice market rally over the last couple weeks following that low on Monday, August 6th, when the VIX spiked to 66. All the major indexes have had nice follow-throughs. Last week, the Dow was up 3%, S&P up 3.9%, Nasdaq triple Q's up 5.4%. That's a big move for a week, and the Russell up 3%. Additionally, all 21 market sectors closed up, even the defensive sectors. US dollar sold off, and the dollar continues to look weak, guys. That may further help the precious metals. Commodities were mixed with primarily weakness in the energy area. some strength here and there. Some of the ags were up, some were down. Now the strength was primarily in the precious metal area, gold, silver, and the mining stocks. Gold, as I said, closed at a new all-time high, and it briefly hit a high of almost 25.50. Short-term technicals on the market, like I said, we put in at low a couple weeks ago, and we've had a pretty big rally up here. Remember, we favored a low in the market. There was other bearish count alternatives, but we favored a low, and that has been playing out. That said, market's come a long way. It's now into a supply resistance area. The VIX is also back to a support area. So if the market's going to pull back here, get a higher low, this is likely the area to do so anytime. Right now, this move looks like a wave 3, and maybe we get a wave 4 pullback sometime soon. All right. Again, let's go ahead and let's go ahead and move on. So item number 2, here is the VIX. Just want to show this because remember, a couple weeks ago when the market bottomed, the VIX did spike up to 65.73. That happened to be within the range supply zone when the VIX spiked, way up into there in that March 2020 time frame. So when you get a VIX spike like that, that's really what bottomed the market, and you can see it's come down quite a bit since then. Next, moving back to the admin area. So let's talk about some of the additional things here before we get into the general market analysis, or back to it. So on the weekend, I created this table on these high-paying dividend stock and ETFs that I've been following. I've researched these before. Many of them have paid for many, many years very consistently. So I have a table here. I have it broken down into stocks that pay monthly dividends and quarterly dividends. So you can see I have the yields here. Some of these are quite high, 20% for OXLC. Some really nice ones here. There's also some conservative ones, some energy stocks, and AT&T. That was always a dividend type play. It pays about 6%. But I provided the live link to this Google spreadsheet so you can look at this on your own. I have typically when the ex-dividend dates are, okay, either monthly or quarterly, some general information grouped by sectors. We have a hyperlink to the charts and to a description, okay? Now, I'm not a financial advisor, guys. I can't give advice, but generally how I would look to play this myself is I'm not just going to pick one of these that have the highest dividend, like OXLC here has the highest dividend here. There's some other big ones here. DSL 12.5%, XRMI 12.2%. You can see that's the S&P 500 risk managed income ETF, so it focuses on dividends. I wouldn't just put my money in the first 1 or 2 highest paying dividends. I would spread it out, maybe to 10 different ones. Okay, that's me. And again, this isn't for everyone, but some folks do like the consistency of dividends, and this is a nice risk for some folks, or it could be a part of your portfolio. While you do other things with the rest of your portfolio, such as your index investments or system trading, whatever. So I'm going to be doing a separate video on this, guys, later, but I'm just pointing this out right now. Next, image number 4. So here's the volatility systems, and as I've been showing you guys, these volatility systems really did well in that last market correction from, mid-July into early August. A lot of these triggered on that pullback. They all caught winning trades, and, the volatility systems got the lows, like you see here on SPY, that's the VIX system. So these all did very well on the website for our subscribers. And image number 5, our KISS systems nailed it. So here's the triple Qs. KISS, just the standard one, not the high performance, right from the website. Remember, the KISS systems are designed to ride uptrending bull markets, but give you that protection with a smart trailing stop. And that's what it's done. And you can see it got you out. I think this was July 18th. Can't remember the exact date. It's not going to get out to the high, but it got out just a week off the highs. It then avoided a lot of that correction. Now, it didn't catch the exact lows, but it still bought back in lower than when it got out. So it did its job. You made additional money by exiting higher, buying it back lower. And you can see it's now had 2 smart trailing stops. So KISS systems and the mean reversion systems have handled that correction and bounce extremely well. Now let's talk about the KISS systems here, image number 6. So here's the standard KISS systems, which have been live for well over a year and a half now. Again, as I stated, here's the basket, BPT basket. We have these various baskets. And, they've all done very well. Look at these nice gains on the baskets. All the indexes are back along, a lot of these things. And they had really nice previous trades here. So we had launched the high performance over a week ago, and we also have SMS, which many of you have been using. I'll discuss that here next. So image number 7 here is the high performance tables. Again, these are live, guys, for subscribers. I didn't count the number here, so I think it's something like 22, 25 different instruments, and there's some duplicate ones here. The high performance KISS, unlike the daily, a lot of these are intraday. 130 minutes, there's 330-minute bars in a day, for example. 78 minutes, there's 5 candles in a daily chart. So they can catch additional alpha, and these are what are long. Very nice. Here's the thing, guys. For those of you who set your SMS up a week ago and you've been receiving text messages, we made an update here. We fixed some bugs. That's why this says beta. Okay, we think we got most of those bugs fixed now. But these systems can send anywhere from 10 or 20 SMS messages a day, such as new entries, new stops, whatever. But guys, you need to come back here and you just set favorites by clicking the stars. If you do not set favorites, you're not going to get any more alerts. So when we basically reset this, and now you got to come here and set your favorites. So if you don't do that, you're not going to receive any more SMS messages. Please be aware of that. The reason why is because it was set up default to receive every one of them. And like I said, it could have been overwhelming for some people that don't want to follow everything here. You don't want 25 text messages in a day. Maybe you just care about 5 of them or 6 of them. Pick your favorites. That's my suggestion. You can pick all of them if you want, but make sure to come back here and set some favorites. Otherwise, you're not going to see any more SMS messages. About a week or so, I'm going to launch this officially with the subscription. You're not paying for high performance beta. That's going to be to use the whole KISS systems. Next, image number 8. Here's an example of the statistics, how they look. Whenever you look in the statistics for the high performance, this is yen. That's the Chinese ETF. But this is how you look. You get some general stats such as winning percentage, total number of trades, 185 trades. You could see profit factor of 3, and a comparison of the system to buy and hold. You can see just no comparison. KISS system's up about almost 26% this year versus 7.6% for buy and hold. But look at the difference in the drawdowns. Drawdown was down 40%. Buy and hold. KISS system only about 9%. Quite the difference. 2023, high performance system made 77% on 15 trades with a 6% drawdown. Buy and hold, you lost 54.5% with a 75% max drawdown. So you see what I mean, guys? Absolutely no comparison to buy and hold. All right. And finally, image number 9. Again, we do have the SMS area here. If you haven't added your phone number, you could do that. You add your phone number there, and then you receive a code on your phone. You have to come back here and enter it. Otherwise, it won't send it to you. All right. So again, guys, I'm excited about the high performance. It's still in beta, but a week or so, we're going to make it official on the website, and then we'll launch the subscription service to everything. But, pretty exciting. I know a lot of you are excited to see all this finally. And let's go and move back to the general market newsletter. So item number 10 shows the index sector table, what transpired last week and on Friday. Again, we had a huge rebound the previous week off the Monday lows, and again follow through this week. So 2 solid up weeks. You can see the nice strong gains on the indexes. Nasdaq 100 up 5.4%. All 21 market sectors were up here, including defensive. So very broad-based rally. Currency-wise, US dollar down 0.5%. That may go well for gold, which I'll get to later. Bitcoin, which has been weak lately, did bounce. It's only up about 1% for the week. It's been lagging overall the market. Commodities, pretty mixed bag here. The index, the DBC itself, only was basically flat for the week. Strong weakness here in some of the energy area, natural gas, crude oil, agriculture. There's some things were up like coffee and wheat and gold. We can see precious metal area, that's really what benefited last week. Gold up 2.6% to a new all-time high. Silver up 4.6%. GDX, the miners, outperforming up 7.4%. And the 10-year, 30-year Treasury yields continue to move down. And remember, the Fed is going to cut interest rates this fall. We'll see how many they do. Finally, item number 11 shows the economic news calendar. Like I said, not a lot of news here. The FOMC is the big one here on Wednesday. Thursday, initial jobless claims. Some S&P global manufacturing and services PMI. And of course, some earnings still, and any potential geopolitical, such as if Iran attacked Israel. Let's move to the index charts. So the first chart, we'll just look at this monthly or weekly chart of the 5 major indexes with simple Bollinger Band. You can see the nice rally back the last couple weeks here. Okay. Russell lagging the most here, and the S&P bigger retracement than the Qs. Qs are around that 61.8 fib. Image number 13, here's a monthly view of the major index. You can see these big hanging man dojis from that big spike down to the August 5th, 6th low and recovery. Next, image number 14. Next, image number 14, here's the Dow Jones. So we'll look at the individual indexes. The Dow, you can see had a perfect 3-wave ABC pullback right into that support trend line I drew in previously. So far, a V-ish rally. Again, I'm expecting a higher low, but this has come quite far. You can see you're into a supply zone now, a little downtrend line approaching. So we also have an open gap below. So on a pullback here, look for a higher low, but we may want to fill that gap soon. I don't think the Dow and the market's just going to go straight up here to a new high without a pullback first. Next, number 15, here's the weekly view of the S&P. Again, look at this perfect rally off that demand zone the previous week. We had drawn in ahead of time, and big follow through last week. You can see I had the moving average ribbon pinch there as well. These supply and demand zones are just awesome, guys. But anyway, that supply is, if you wondered what set up that demand zone, so here, when you broke to new highs back here, that was a break in structure. So then when you get the pullback and then a reversal candle, that sets your demand zone, okay, in which we bounced off of. Chart number 16, here's the weekly KISS systems. So no changes here. New smart trailing stops on the S&P. The Dow moved up slightly. And again, these have been long for quite a long time, since early 2023. These are the weekly KISS systems, so they give more wiggle room. They stay longer, so they can be in trades for 1 or 2 years at times. No changes here. Next, image number 17. Here's the S&P KISS daily system right from the website. And again, guys, excellent. Got out nicely in July, got back in. Several days off the lows. So far, 2 new smart trailing stops. The KISS system's doing their job. Excellent. By the way, here's some little secret sauce on the KISS systems. So the KISS systems, because I get questions, well, how do they work, stuff like that. They look at various average true ranges of the market, so they self-adapt. That's why they're generally profitable in most things. That said, I have some also secret sauce in here. When you're in an uptrend, they also look for ABC pullbacks. If you remember, ABC pullbacks and uptrends are buying opportunities, those 3-wave pullbacks. Here's an example of how the system can identify a 3-wave pullback. And I thought this was a little very slick thing that I came up with. This is the moving average ribbon with the BPTMA Deluxe. So whenever I have a 4-color change, say a red, then green, that sets up the ABC. So the systems actually look for that. So this was an ABC buy, and that was a pretty good buy, wasn't it? Next, chart number 18, here's the monthly chart. Just you can see how the VIX or the S&P came down to that demand zone where it rallied off of on the monthly. Chart 19, here's another monthly chart of the S&P, just showing the bigger picture. This goes back to 1994. This has been a very good guide for long-term secular markets, bull markets. This 14 stochastic on a monthly chart. This 50% area tends to be the dividing line between bull and bear. Okay, and it's worked very well. So we're still in this uptrend channel on this log chart from the 2009 bottoms. So on a long-term secular basis, we're still in that same uptrend from the 2009 bottom. Next, chart 20, here's a daily chart. So remember, we're fractal. We're just going to continue moving to smaller time frame. Here's the daily. The S&P, again, all it had was 3-wave pullback. A, B, C. This was not 5 waves. It was simply a 3-wave, guys. We've rallied up. We took out the downtrend line, which is positive, but we're into a supply zone here. So I'm on the lookout for potential pullback at any time, which I think would be a buying opportunity. But if you haven't went long now, it's risky to go long here without a pullback first. By the way, this broken downtrend line would also be a support. Next, chart 21, here's another daily chart of the S&P, this wedge. Remember, we were marking this as a WXY ABC 4th wave. Well, that, it appears to be playing out. We expect eventual move to a new high in a wave 5. Again, I don't expect it to go straight there. I'm looking for maybe a pullback here soon at any time for a higher low. Next, chart 22, here's another daily chart, just zoomed in a little bit. You can see how we bounced out that larger demand zone, which is a good area to dip your toe in. That's when the VIX spiked to 66, by the way. We're now up into this supply zone. We'll see if we struggle here or not. Chart 23, here's the half-day chart of SPY. This just updating this wave count, ABC, which we had. And right now it appears that we're in like a wave 3 of 5 here. So again, eventually looking for a pullback in a 4, then maybe another move in a wave 5. We're in the supply zone. Chart 24, half-day chart, just showing this is a resistance area here. You can see it was previous support. Now it's resistance. Again, I'm viewing this as a wave 3. Pullback eventually met. If we pull back in here, there's an open gap here that could be a target. There's also a demand zone in there. Then chart 25, here's a 2-hour view. Again, you can see the supply zone, this resistance area right here, the open gap below. There's also an open gap up here as well, which I think will be filled when we do go up again. But if we pull back here, this gap could be a magnet for a higher low. Chart 26, here's a 30-minute view, just showing the same thing. And chart 27, yet another 30-minute view, just showing the same things. Supply zone, open gap, demand zone right here. You can see the wave counts 1, 2, 3. So a good pullback here. I view it as a wave 4. So hope that's clear. Next, chart 28. Here's the 4 time frames in the S&P with those indicators. Again, you can see we've rallied up to the. Had to refresh that chart, guys. So wasn't updated. Here's the updated view. So again, you can see we've broken above the ATR now in all these time frames. So the ATR is now support. Okay. I see the mark 13 on the half day, little A on the 130 minutes. So again, like I said, we could see a pullback here at any time just because we're in that supply zone. Next, chart 29. Here's a 60-minute or 2-hour chart of SPXU. That's the triple inverse ETF. I'm listing this as a hedge, okay, just because it is into a demand zone down here. And if you have a bunch of long on the indexes that you don't want to sell, maybe for tax reasons or who knows what, you could always hedge it with SPXU if you think we're at a place for a pullback in the market. Chart 130, here's the 30-minute view, 60-minute view. Again, you can see there's some MACD divergence now developing. Next, chart 31, here's the triple Qs, KISS daily system. Again, done awesome. Got out just about a week off the highs there in July. Got back in a few days off the lows. And 2 new smart trailing stops. System's doing its job very well. Chart 32, here's the 4 time frames. Similar look to the S&P. Again, the Qs haven't bounced back as big of a percentage as the S&P. So the Qs here are right around the daily ATR where price is broken all the other smaller time frames. Notice the DeMark 13 and A here on the half-day chart. So we could be looking at a pullback soon here just because we're at resistance. The ATRs is potential support areas. Next, chart 33, here's the weekly Qs. So S&P up, or triple Qs up 5.5% for the week. That's a big move. You can see perfect rally off that multiple areas. Weekly demand zone, 50-week EMA, and weekly uptrend line. So you had three technical components lining right there for a bounce. We've retraced about 62% of that move down now. Chart 34, here's a daily chart zoomed out. So remember, we did hold that long uptrend going back to January 2023. We had broken the one from October 2023, but we held the bigger one. So V rally up, but we are testing this broken trend line, neckline up here, which is now resistance, so be aware of that. Chart 35, here's a zoomed in daily, just shows the big rally off the demand zone and 200-day moving average. We're now into this open gap area, which if we go up further early this week, I think that gap is a magnet, but then we could be set for a pullback soon. Now in a pullback, where would I look for a buy? Well, there's a gap here and there's a demand zone below. Chart 36, here's a 2-hour view. Just shows that clean break of the downtrend line there. That was also a trigger to go long if you didn't buy back here. And, we're into a gap. There's a demand zone down here. Chart 37, here's a 2-hour view, just showing clean trend line. These areas, the shaded areas, are your open gap areas. Chart 38, here's a 60-minute view showing the same thing, just a 60-minute time frame. And chart 39, a 30-minute view. Demand zone down here. Finally, chart 40, here's IWM small caps. Again, they rallied off the demand zone near that 200-day moving average. Now, they're lagging here. There's a resistance approaching. Notice that. It'll likely struggle there on the first test. Chart 41, there's the 2-hour view. Okay. All right, guys, that does it for the major indexes. Let's move on, look at a few of these indicators. Here's the VIX. So, again, the VIX, when it spiked up there to 66, that was that market bottom. Fear came into it. Remember, you had a nice base here on the VIX. Look at my comments from July 24th. Well, that base led to that huge rally in the VIX. That's what I was concerned about back there. That last close back inside the Bollinger Bands right here gave an excellent VIX Bollinger Band buy signal. That said, the VIX has come back to the 200-day moving average on the daily. Here's the 60-minute log chart. And you can see it's come down here. There's a little demand zone here. There is some open gaps down here that could be filled, but we are now starting to see some divergence forming. So the fact that the S&P is at some supply zone, the VIX is nearing support, that's why you got to be a little cautious. By the way, these are some gaps on the upside as well. The VIX loves to fill gaps, guys. Chart 44, this chart I showed a couple weeks back, that VIX VXV ratio, when it had that massive spike, obviously that led to that market low. That was a good timing. Next, chart 45, here's the breadth thrust indicator. Okay, someone asked me, have we had a breadth thrust in this move? No. The breadth thrust has to occur whenever this is below 0.4 and rallies up over 61.5 within 9 days. So we've already had that. But it's been a pretty good rally, but it's not a breadth thrust. It didn't occur fast enough. Next, chart 46. Here's an interesting chart, guys, and this has nothing to do with the market right now. It's not a sell signal. It's not something you should base your trading on, but this is the S&P 500, and these are the PE ratios. So stock charts has PE of 20, 15, and 10. Now, honestly, guys, in this kind of QE type of, driven market, PEs of 10 or 15, to hit those are extremely rare. You only hit those on major bear markets such as 2008. That's the last time we hit these areas. Even in 2020 when we had that just over 30% correction, we didn't even get close to those. We got down to the PE of 20. You can see where we bounced. Okay, that said, the market's rallied a long way, but look at the PE of 20. Look at the distance on the gap here now. It's very wide. Price is very high. The point I want to make is this is eventually going to matter. So we're eventually going to see earnings accelerate to get closer to price again, play some catch up, or we're eventually going to need to see price have a good correction to get closer, basically revert back to the mean. When's this going to occur? I don't know. It could be 3 months, it could be 6 months from now, but eventually we will get that, bear market to reset some of this. Just wanted to point out. Next, chart 47, here's the S&P versus the high yield corporate. They tend to move together very well. You can see on this weekly chart, tend to mirror each other. You get divergences. The high yield corporate tends to lead, and high yield corporate was pointing to this rally. It was leading higher while the S&P was leading lower, and you can see that's helped pull up the market. Next, moving to the bond market, chart 48. Here's TLT 20-year bonds. Remember, it broke out from this nice weekly coil we showed a few weeks back. Still looks higher to me, honestly. Chart 49, here's TMF. That's the inverse ETF for the TLT. It was a way to play a leverage view, and that was a good trade out of this coil. I also mentioned it was a good buy in that pullback that retested resistance. So still looks like it went higher to me. Chart 50, here's the weekly chart. Again, broke down from that weekly coil, as you know. It did bounce off that 200-week moving average last time. Chart 51, here's the daily chart. Again, got very oversold last Monday. It's bounced back. We got a higher low, but it's still in a downtrend. And here's the bigger picture view. I called this pullback, ABC pullback, early this year, months ago, and that has played out. Again, the 10-year is now in a secular bull market higher, guys. So don't expect it to come down to levels down in here, where you're going to have the, 3% mortgages and stuff. That ain't happening again, guys. Maybe your grandkids, if you just have kids now, it's going to be a long time. Interest rates are now in a secular bull market. That doesn't mean they're going to go up long term. Like I said, I've been expecting a pullback here, but eventually I'm expecting them to form a higher low and go up again. All right, moving on, look at a few market sectors here, just some of the important ones, not all of them. Here's the technology. Again, everything's rallied back, but you can see it's back to its 50-day moving average. Again, tech area is lagging the S&P a bit on this rally. Chart 54, here's semiconductors, same deal. Nice rally off that 200-day moving average and demand zone. Now there's an open gap up here, 50-day moving average. That's your first resistance. Chart 55, consumer staples. This area showed no signs of a correction, did it? Just beautiful, very strong. Chart 56, financials. Also big rally off that support. Not quite back to the highs, but getting close. Chart 57, banks. Nice rally off that demand zone. So far, only back to the 61.8 fib. Chart 58, transports. Again, great example of supply zone where price stalled back in July, sold off, bounced off the demand zone. Now we're at resistance. You can see the power of those supply and demand zones. Chart 59, healthcare. Held that support channel from 2 weeks ago. It's now rallied all the way back to the top. No MACD divergence here either. Chart 60, utilities. They've done well, as you know, as well. Nice move. And one of the utility stocks, NE, that we put out a few weeks back out of this coil, had the first move to that previous high. But to me, this still has a cup and handle look. Like this could be a handle that's forming. So, guys, this could eventually break out here and have it a further move up. So watch this one. Chart 62, real estate. So it's had a nice move up. It's anticipating the Fed cutting rates soon. Here you're forming a tight coil. Chart 63, XLE Energy. This area's bounced back a little bit as well, but still has work to do. Energy is above its 200-day moving average, though. Another sector I've been showing is the Chinese market. FXI bounced off that demand zone from a couple weeks ago. Nice rally, now down to the downtrend line. And the one I've been long is yen. By the way, that's in our high performance KISS systems. Nice rally off that area. KISS system has been long this one, doing very well. Let's go and move on to commodities. Chart 66, DBC. This is the weekly chart. Again, the previous week it rallied off that lower coil support near the 200-week moving average. Last week was flat essentially. Chart 67, here's the daily. Again, we had a perfect bounce off that long-term support. Not surprised to see a pullback here. I'm looking for a higher low in this pullback. Again, that weekly chart I just showed you guys, that, like I said, if you're a long-term player, you could have bought there with a stop at the lows. because that was long-term support. Chart number 68, here's crude oil, weekly chart. Still in this coil pattern. Energy is building. Look how tightly wound these moving average ribbons are. Chart number 69, here's the daily. Again, we're back below the 200-day moving average, but in a bigger coil formation. Chart number 70, here's UNG natural gas. A couple weeks ago, I highlighted this falling wedge, which gave us a nice trade. Hope you took profits. It's pulling back. That said, these wedge patterns can often mirror to inverse head and shoulder patterns, so I'm watching for a higher low inverse head and shoulder pattern potential. Chart number 71, Boyle, that's the leveraged play to UNG. And here's Boyle on the 2-hour time frame with some fibs. I'm going to watch the 61 fibs, see if it can find some support around there. If it does, I may take a shot at a long. Next, chart number 73, copper. Again, copper's had a perfect 3-wave ABC pullback from those highs in May. To me, that was an easy low-risk long a week or two ago with a stop. It's moved up nicely since. Chart number 74, here's what I bought, CPER, one of the copper ETNs. You can see same pattern, ABC. Okay. There was also the demand zone there. Chart number 75, here's DBA agriculture. This is the monthly chart. It's down about 1.5% this month. Again, broke out of a cup and handle early this year that I showed. Big rally. It's now had a 3-wave ABC correction. If that is into that correction, this could be set up for a new run higher over time. Chart number 76, here's the daily. Just kind of chopping around here. Held the 200-day moving average, but chopping around here just below, between the 200-day and the 50-day moving averages. Chart number 77, corn ETF. I'm still monitoring this one because I like this wedge with MACD divergence. So I'm watching this one for a bounce. Chart number 78, coffee. Coffee's kind of got a cup and handle look here. Don't let Starbucks know, they'll raise the prices. Next, chart number 79, Bitcoin. So far, Bitcoin pulled back. It held that area, which became support. That may have completed that wave 5. Eventually, I'm expecting a new all-time high in a wave 5 up here. Chart number 80, here's the 2-hour view. See the same pattern. So we have a potential little ABC higher low there. Next, chart number 81, US dollar, weekly view, down 0.6%. So again, guys, there's still two options here. This could still form a higher low as a wave D, rally up in a wave E. But if it both of these counts are bearish. So the one in blue is bearish because you would get a rally soon, but it would be a wave E. Then you would eventually break the quill to the downside. The more bearish view immediate is that this is a wave 3 down. Chart number 82, here's the daily. Again, we're in this demand zone, which we've held for the last month, as you can see. But you test the demand zone too many times it breaks. So we'll see if it ends up breaking down. Chart number 83, Japanese yen. Again, powerful rally out of that lows. Remember, I was bullish on the yen. Right now, it's got a bull flag look to it. I think it goes higher. Chart number 84, here's FXY on the weekly. Again, beautiful move for the last couple months. This, by the way, this broken trend line is now support. Could be an area to be long with a stop below that. Chart number 85, here's the monthly chart. Again, I remember a few months ago, I've been talking about this falling wedge with the MACD divergence. That was a good buy. Now let's move to precious metals. Gold made a new all-time high last week. That weakness in the dollar helping that. Here's the ETF. Broke out of that coil I drew. New all-time high. Chart number 87, here's gold on the daily. Again, held that demand zone. Now the one thing you got to watch here could be a little wedge. There isn't really any MACD divergence here. So this could be blown out, but it is something to watch for just because there is a little wedge potential. Chart number 88, here's the monthly view. Again, or the weekly view, up 2.6% for the week. We're still working on this wave 5 of 3, in my opinion. Long-term bull market. Chart number 89, here's the monthly chart of gold. So again, this is what I'm viewing, guys. We're working on this major wave 3. On eventual pullback is a wave 4. Here's a demand zone. That would be a great buying opportunity if we get that. But I'm expecting gold to go then much higher in these wave 5s. Maybe we'll see gold at $3,000 to $5,000 an ounce eventually. Chart number 90, silver on the weekly, up 4.5%. Bouncing, holding that Previous resistance turned support once again. To me, that's a good area to have a long-term swing stop if you're a long-term holder of silver. Here's the daily. Like I said, perfect three-wave pullback. I like buying three-wave pullbacks, and it held that support. Jabber 92, here's the monthly chart. Remember this monthly coil we broke out earlier in the year. We pulled back. We pulled back off that first supply zone. But I'm eventually expecting silver to rally up to these new supply zones and eventually test those previous highs. So I like this long term, guys. Here's the quarterly chart. Again, we first pulled off that supply zone, or monthly chart, I mean. But guys, I'm expecting silver to eventually retest that 50 area, which was tested in 2011 on that blow-off move, and the blow-off move from the Hunt brothers in 1980. Okay, long term, I think it's going back there. Next, Jabber 94. Here's GDX, the gold miners, up 7.4% for the week. That's a big move. Jabber at 95, here's the monthly view, the bigger coil. Here's the next long-term supply zone. That's likely a target longer term. Jabber 95, GDXJ, that's the gold miner junior ETF. Clean chart here. You can see this area around 63 has been long-term support and resistance. So I think that'll be retested over time. Jabber's 97, here's the daily. You can see we broke out of the downtrend line last week. Still not back to the highs, but essentially a three-wave pullback there. And Jabber 98, here's a 60-minute chart. Now, the one thing that concerns me short-term here, you have 5 waves. Doesn't mean you stop here, but whenever you start having 5 waves, you want to start paying attention for, some sort of pullback or reversal. Now, as far as individual trades, guys, here's some awesome ones we've had. IAG, IM Gold. It's been one of the strong ones. You can see broke out a week ago, been moving nicely higher. Jabber 100, SA, I mentioned this last week. I said it looked like a cup and handle. You can see a big breakout on Friday on greatly expanding volume. Jabber 101, GOLD, Barrick, that's also been leading higher. One I'm watching here is this silver stock, FSM. You can see perfect three-wave pullback back to a demand zone. Looks like a good potential swing buy area. Jabber 103, here's the daily. So notice what you got here, three-wave pullback into the 200-day moving average. So I think one could be long here with a stop right at that low. And guys, the final thing, let's talk about some trade ideas. Here's NVIDIA. NVIDIA, as you know, filled that gap on that Monday, bounced off that demand zone. It's had a nice move up here. So just like on the indexes, it may soon do for a pullback. But you could see you had a nice buy down there. You also had a confirmation on the RSI trendline break. Jabber 105, Amazon. Remember, that bounced off its demand zone as well. Everything basically bounced off these demand zones a couple weeks ago. It's nearing some resistance up here, though. Jabber 106, AMD, we've had it on our watch list. Bounced right off that demand zone. That was a good buy. Broke the downtrend line. We're working higher. Resistance is obviously the 200-day moving average and 50-day above. Jabber 107, Apple, little head and shoulder played out, but right only to demand zone. Hope you took profits there. It's rallied all the way back up now. Jabber 108, ESOA, this is one from last week. Energy Services of America. Kind of looks like a cup and handle here. Still looks good to me. Jabber 109, CX, little bottoming play. Resistances over the 690 area. Jabber 110, Unity Software, little base here, resistance 1650. First target would be this resistance horizontal level. Jabber 111, AKAM, tight little coil here. We'll see which way this breaks. All right, guys, that'll do it. We'll see how futures open here later this evening, and I'm going to try to do 2 more videos today, so be on the lookout on that. Have a good rest of your Sunday afternoon. Take care.